So they keep telling you stocks are at record highs, right? But what if that's all just an illusion? What if I told you that in reality, stocks are actually down 84%? Yeah, I know that sounds completely crazy, but it all boils down to one simple critical question. What are we using to measure high in the first place? All right, let's get into it.
You see the headlines everywhere. The market is booming. But does that actually match what you're feeling day to day? It's this strange disconnect so many of us have. Your retirement account looks bigger on paper, but somehow it feels like you're just treading water, struggling to keep up. That feeling, it's not in your head. It's a signal, a really important one. I mean, look at this contrast. On one side, the S&P 500 is up a whopping 110% since early 2020. Home prices have just soared. But then there's the other side, our side. The daily grind of grocery bills going up, gas prices, insurance premiums, all while our wages have basically gone nowhere. So what gives? What is really going on here?
Well, this exact mismatch, where all the charts are screaming boom, but real life feels more like a bust, we're going to call that the wealth paradox. And what's wild is that this isn't new. This is a puzzle that has shown up right before every single major currency shift in history. Okay, so here's the absolute key to understanding all of this. The problem isn't that the numbers are fake. The S&P 500 really is at a record high when you measure it in US dollars. The real problem is the ruler itself. The dollar, the very yardstick we use to measure our wealth, is broken. So let's dig into that. How exactly is this ruler, our money, broken? Money is supposed to do three main jobs, and one of the most important is being what economists call a unit of account. Just think of it like a yardstick. It's supposed to measure the value of everything, your car, your house, your salary. But a measurement is only useful if the yardstick itself stays the same length. So just how unstable has our yardstick been lately? Well, get this. In February 2021, the M2 money supply, which is just a broad way of counting all the cash and easy-to-access money in the system, grew by a staggering 27% in a single year. That is the fastest it has ever expanded on record. Our ruler wasn't just bent, it was stretched like a rubber band. Here's a super simple way to think about it. Imagine you own 10% of a company. Now, what if that company suddenly issues millions and millions of new shares? Your ownership gets diluted. You still have the same number of shares, sure, but they represent a much, much smaller piece of the whole pie. Well, that is exactly what happens to the buying power of your savings when the money supply gets expanded. And listen, this is not some new 21st century problem. History is absolutely littered with examples. Ancient Rome started secretly reducing the amount of silver in its coins. In Weimar Germany, you had people who were paper millionaires but were literally starving. And just look at Argentina last year, inflation over 200%. The pattern is always the same. The unit of account breaks down, prices in that currency soar, but real wealth just gets wiped out. Okay, so if our dollar-denominated ruler is broken, what happens when we switch to a different one? It's time to check the real scoreboard. Let's try using a few different yardsticks and see what we find. This quote just hits the nail on the head. It frames it perfectly. The entire illusion of wealth that we're being sold just crumbles the second you ask this one fundamental question. It's not about the number, it's about what you're dividing it by. And this is where it all shatters. Measured in US dollars, the S&P 500 looks incredible, right? Up 110% since early 2020. The comfortable illusion. But now, let's switch the ruler to gold, the classic store of value. All of a sudden, the market is down 21%. You see the first crack. And now, measure it in Bitcoin, and you see a hidden collapse of 84%. Just let that sink in for a second. Down 84%. After all the stimulus, all the talk about AI, all the booming headlines, the stock market has lost the vast, vast majority of its value when you measure it against a truly scarce digital asset. This isn't just a bull market. This is a story about a dying denominator. So, you have to be asking, why does this keep happening? How on earth can the US create trillions of dollars out of thin air while asset prices just keep going up? Well, the answer lies in this really clever global system that's been running for decades. This system has a name, the imperial carry trade. And here's the basic idea. Because the entire world needs US dollars to trade and save, the US gets this unbelievable advantage. It can print and spend way more than it produces because other countries have no choice but to hold on to those dollars,
which basically means they are financing America's debt. Here's how the whole loop works. The world needs dollars to do business. The US prints them and spends them. Those dollars flow all over the globe, but then they come right back home as other countries use them to buy US assets, stocks, bonds, you name it. This keeps US asset prices artificially high. And here's the imperial trick. The US can then devalue its own currency through inflation, which shrinks the real value of the debt it owes to everyone else. It's a pretty powerful, self-reinforcing system.
But it really looks like the smartest people in the room are starting to catch on. This chart is incredible. It shows that central banks around the world have been buying physical gold at record-breaking rates, over 1,000 tons in 2022 and another 1,000 tons in 2023. This isn't about speculation. This is about insurance. They are quietly swapping their melting paper claims for real, physical, hard assets.
So, with all that said, what does this actually mean for you, for us? Just acknowledging the problem is the first step. So now let's talk about an actual framework for what you can do now that you're looking at the scoreboard in a totally different way.
Okay, first, start using more than one yardstick. Don't just track your net worth in dollars. Track it in ounces of gold or in Bitcoin too. This is going to give you a much clearer picture of whether you're actually gaining ground. Second, understand your positioning. Paper assets are just claims on a system that is actively being diluted. Scarce assets, on the other hand, are the things that tend to hold their value across these currency cycles. And finally, stay consistent. The best system is always the one you can stick with, something that removes emotion from the decision-making process.
And that really brings us to the final and most important question. This isn't about day trading or chasing the next hot thing. It's about awareness. Because once you see that the fundamental tool you've been using to measure your entire financial life is broken, you can never look at wealth the same way again. It forces you to ask yourself, measured against something real, something that can't just be printed into existence, what am I truly worth?